Welcome everybody to Markonomics 101 presents Hoot Loot, where you can get all the truth and skip all the cable news, all the financial cable news. We have a great program today. You are going to learn more in 20 minutes of truth today than you ever will from those cable news people whose name we will not mention. Today's show is called Reddit Rebels GameStop Wall Street. And this show, a little bit is going to be to explain what exactly has happened last week, and we're going to talk about that right now. A lot of people know that there's a short squeeze going on, but don't know what a short squeeze is, or short selling for that matter, or how a bunch of like little guys can overrun like a big old giant like the one behind me. I used to be one of those hedge fund guys. I know how you did it. You guys also affected my trading the last couple of weeks. I'm going to show you how the Reddit Rebels had more impact than they even know. I'm going to show you some of the places they did. But in any event, I'm going to talk a little bit about what a short sale is and what all happened, okay? Now, remember, the way to make money in stock investing, whether it's trading, investing, is to buy low, sell higher. Or you could do it in the other direction. You can sell first high and then buy low second. That's called a short sale. So in order to actually effectuate a short sale, you have to borrow the shares from an existing investor. Now you have to actually borrow those shares and then sell them. You collect the proceeds like you would a real sale, and they actually earn interest on them, or at least they used to. Now they don't because there's no interest period. But when when I ran a hedge fund and when we short sold, it was actually a pretty good business. Now the disadvantage of short selling, or the horrible part about it, is that you have unlimited losses. Okay, so when you short sell something if you buy something at 20, you can only lose 20, but it can go to 3,000. Okay, like Amazon, because everybody bought that, right? So in this case, if you short sell at 20, you can only make 20, but you can lose 3,000. And that's exactly what we're seeing. And there's certain rules in Wall Street to govern how short sales are executed, to govern what happens, and basically it becomes a random event. A margin call occurs when an investor has too little equity in the account, too much borrowed money. So if you lose a lot on a certain short sale, like GameStop, it's game over unless you do one of three things. You can either put more money in the account, which investors are reluctant to do. You can, reduce your positions, or you can cover and, absorb the loss. I can tell you personally that no professional investor, especially a hedge fund cocky guy like I used to be, is going to want to admit they're wrong and just cover the thing. So they're probably squirming in their shoes, basically right now, wondering what the hell to do. But that's how it all happens, because the randomness of what everybody decides at every moment, whether you are bought in by the brokerage firm, and you can be, if you fall below a certain amount of equity in your account and you're getting your shirt handed to you, the brokerage firm can step in and buy in for you. In other words, because you no longer have the borrow. Let's say that the guy who you borrowed from sold and that borrow is gone, and that was the case in GameStop. That's why it's worth so much money, is because basically it's been gamed. That the Reddit rebels gamed Wall Street. They took their own rules and used them against them. And I salute you guys. We'll be back in a minute with the charts. Don't forget to like and subscribe. Hoot Loot, we love you. Reddit rebels, congratulations. All right, everybody, welcome back. I'm going to explain a little bit more with charts, just exactly what is going on and what the implications are. Things have turned ominous. I'm going to tell you that right now. Lots of money is going to be lost, and I'm going to try to help you prevent that if at all possible, if you guys actually care what I think. But anyway, the first chart is GameStop, 1 hour intervals. Look at this. Okay, so you had a stock that was as low as about $20 a share, that's traded to $480 a share, within hours traded down to $115 a share. But if you shorted this thing around 25 bucks, you have lost 20 times your original investment. You don't want to. Now, the last thing a professional investor wants to do is cover here and absorb the loss, because the price is ridiculous. Now, they're squirming in their chairs. They might be bought in, these hedge funds. But I'll tell you this, all you Reddit rebels out there, you made your point, and I hate to see you get killed, but you will. If you're still holding this thing, it eventually will get to equilibrium, even though it was at 140% of short float. It will get there. I mean, there are many ways that this can happen, and I think it'd be a great time for all of you guys to just claim victory, go home, take your ball, take your profits, and get ready for the next battle. Okay, that's my advice to you, and I hope that you understand that, because losing money here is not, losing money for making a cause, may not really be the best thing. So anyway, that's 1 hour intervals on GameStop. Look at how volatile it is, 480 to 115 in a couple hour span. Do you know how much money you could lose or make? Jeez. Um, this is 10-minute intervals, okay? Now you have to go to like really short day trader type intervals, because this thing whips around so much and so crazily. Now it's having impact on other things too. And here's where the margin calls come into play that I mentioned early on. The margin calls then force you to reduce positions in other things that are more liquid, okay? If you cannot cover, okay? So for example, the Dow broke out, broke down, bear market. We've been telling you that this thing is coming. We talked about this being a bear flag. Now, what makes it a bear flag? Ace, they already understand that, okay? Jeez. You'd think that Ace gets enough attention as it is, but he never does. Okay, so a bear flag, the reason a bear flag occurs is that it's a very tight range, and a tight range makes for low energy. And so this thing was, imagine a water pitcher. And this thing, you're holding up a water pitcher and it just pours over the edge of the water pitcher. And that's what's happening with all the major indexes. They have just entered bear market, not bear market territory is officially defined, but they're sells. And I'd want to be short here. That would be the only place I'd want to be here, because God knows what's going to happen on Monday morning. Same with the NASDAQ. NASDAQ has just perceptively gone down through its bearish ascending flag, and a tech wreck is ahead. I'm sorry. Standard & Poor's 500, same thing. We've been talking about a bear flag, and sure enough, it broke down. It was not likely to break up out of this. The small cap index, now this is very interesting. The small cap index has had some impact from the rebels. I know that. And what I drew here, this box at the top in blue, this is an island top. Now, all of these people, there was a gap. You'll see a gap before the island top. And what happens is that everybody that bought in that island top, if this index gaps gaps down on Monday, which is possible, that it does something like that, you've trapped a whole bunch of holders at levels in which they're now down, because everybody that's bought in that box is now underwater. And that starts creating a horrible dynamic, and it creates a really vibrant sell signal. So, be careful here. The Dow Jones Transportations, the transgender Americans, well, they broke down too, as we have been saying that they would, and it made a 7-point reverse wave reversal. These do not look good either, and these are economically sensitive. All of a sudden, the economic forecast that the market is giving us has changed 180 degrees, and we're gonna show you that. And now we're going to go to some of the big cap tech weighted stocks. For the Nasdaq, for the market to go down, you're really going to need these guys to go down. Apple had a terrific earnings report this week, and yet look, it's right on its support line. This thing is just about to break down, and all I can say is uh-oh. Amazon reports earnings next week, still in a constructive pattern, I have to say, but every other stock that's reported earnings just about has broken down. They broke up at first, and then all of a sudden they sell off because everybody's in them. That's the whole thing about market psychology. Once everybody's in the boat, once somebody wants to get out of the boat tips over. So that's kind of what's happening here. There's no one left to buy, and so all these momentum chasers that bought stocks like this are going to be holding the bag in all likelihood. So we'll continue on here. Facebook also, good earnings. Everybody's just sitting at home, complaining on Facebook, and it's the fact checkers. I'm telling you, the fact checkers are what make Facebook so valuable. But in any event, this is typically a bullish pattern, but I don't know, with the way things are looking right now, I don't know. The Google has a very good pattern. This one still looks very constructive, but we'll see what happens. Again, this is not a candidate to buy low and sell high, even if it has a constructive pattern. You have to buy low and sell high, or sell high and buy low, which means you would be shorting something like Google, but I wouldn't short it here. I mean, it's in a healthy pattern. It's not giving us any reason to, so we'll see. Microsoft, also a healthy pattern. It started to break down on Friday, even though it had like incredible earnings. I mean, if there's one thing that the bureaucrats love in Washington, it's making sure that these mega corporations are taken care of, and the environment in which they do business is almost monopolistic. So, might as well not fight them. Go with them. Netflix, another one that's carried a lot of weight. People, I think everything's been priced into this. Netflix had a tremendous earnings report, almost broke out, but it didn't. It didn't because people already expected it, and there was really no way that you could beat expectations that were like through the roof anyway. So, NVIDIA is a maker of high-speed chips, and one of the things we're going to hear about in a minute here, I'm going to tell you this, that there's actually a chip shortage, believe it or not. And especially companies like NVIDIA and others they make gamer high-speed chips, and apparently they're in short supply because all the auto companies now cannot get chips to put in their cars, because now all of them are going to be Teslas. Yes, even Ford and General Motors are going to become Teslas, because that is the business model that has been laid down by the Biden administration, especially Janet Yellen, who's still yelling at me about getting her position wrong. She's a Secretary of Treasury. Sorry, Janet, I'm sorry. She is not the Federal Reserve Chairman. Let me get that straight. Let me get that right. Oh, God, I hope she doesn't call. Anyway, she's so mad at me. Anyway, so Tesla. Oh, my good buddy Elon Musk is going to be here soon, because we're going to talk about marijuana stocks, which he loves. We're going to talk about short sells, which he hates. He's coming at 420 today. He wanted me to make sure that you all knew that. And, I keep telling him, switch to vapes, Elon, please. He stinks up the joint. But I'll tell you this. He has gotten such a kick out of this out of the Reddit rebels. He so much did not like. He took it personally when people shorted his stock. He only had a 15% short ratio to float, but boy, did that ever help him. And so, you don't want to ever go into companies, have anything to do with them when they have a high short float like that, because once there's a lot of shares short and all that, things like this happen and they distort markets. So US dollar, we've talked about this. It is changing, it looks like, possibly. It's made a short-term bullish rounded bottom, and this is going to explain a lot about precious metals and why they haven't done as well, I think, in the last several months. Still remain bullish on them, but got to throw in the towel here. They're not looking all that good short term, but we'll get to that. This is the real reason I became very bearish this week. Money center banks, they broke down. Look at that rounded top, and they are now starting to extend themselves on the downside. This is a very ominous sign for the economy right here. You don't want the financial system to be in trouble. And, they did break out of an ascending wedge, which is kind of a sign of exhaustion. So these are now in a downtrend, and I'll tell you, that's not a good sign for the market at all. When you have techs in a downtrend, banks in a downtrend, oil's in a downtrend, it doesn't look too good. Now, I brought this up here. This is the VanEck Retail Sector ETF. Okay, now we're going to look at retail and credit cards, because consumers are basically the economy. Okay, 70% of GDP is consumers. So how do you measure them? You measure them in spending, retail, and credit cards. So this ETF is an ETF of all the retailers, okay, of all the major retailers. And notice it broke down. And we've been mentioning that that retail 70%. You don't want this heading in the wrong direction. So that's not a good sign. Another sign that we are probably not entering the best of times for either investing or the market or the economy or anything else, despite what you want to believe. But if you had GameStop in your retail ETF, like this S&P Retail Sector Fund, look at how differently you've done. All of a sudden, with GameStop in there, GameStop is now 20% of this fund. Now, do you want to know something else that's crazy? Money came out of this fund, a whole bunch of it. Do you know why? Of course you don't know why, because you're waiting for me to tell you. I'm going to tell you why. because basically this fund allows distributions in kind. So if 20% of your value's in GameStop and you've got the ability to get your shares, your proportional shares, people redeemed it, almost redeemed the whole fund. And so just to get the GameStop shares. So again, Reddit rebels, you've done it. You've affected this thing. You've caused this chain reaction and who knows what more. Okay, now we're going to look at some of the real big consumer companies. American Express broke down, looks like crap. Big credit card company. Oh God, this is what started to get us bearish right here. Costco wholesale hasn't broken down yet. One of the big 4.5 retailers. There's only about 4.5 left. Uncle Sam has definitely does not like any other than the big ones to survive. But this thing will probably break down. It doesn't look good. It's in a rounded top. These rounded tops are really good at picking tops and bottoms. They're very accurate. They're just hard sometimes for someone to recognize that that's indeed what's going on. But this is it. These patterns are very reliable, except when you have those Reddit rebels getting in the way. Discover Financial, another credit card company. It was in a it was in a parabolic. Why would a credit card company go parabolic? I mean, that just makes no sense. The business has been around here forever. It grows at 2% a year. So who knows? But this tells me consumers are tapped out. Another credit card company, Amex, and all four are, as we'll soon learn. Berkshire Hathaway, the Warren Buffett company. I'll tell you this, it's broken its trend again. I don't think it's a false flag because it is consistent with what we're seeing elsewhere in the market. MasterCard, one of the biggies. Look at this. Broke initial support, first red line. Major support is in the dotted red line. This does not look good that people are not, that the credit card companies are starting to go down. That's not good. It means people are spending less or they are anticipated to spend less because those stimulus checks are going in the market. Guess what? That's why we have a huge bubble. Jeez, they're not going to spend on these kind of things, I'll tell you. Nordstrom's, this is the half retailer of the 4.5s. It did kind of have a burst of energy and now making a rounded top, of course. And so Nordstrom's, I think, probably has made a hell of a move here. I mean, from like 12 to 42. This is a perfect example of take your money off the table before the table takes your money off of you. Nothing wrong with a big profit in a company. Thank God. Be grateful. It's good stuff. Profits are good. Losses are bad, even if they're to prove a point. All right. So Target also has done very well. This stock also has broken its trend line, turning bearish. That's another retailer for you. Visa, it's broken. It's really not looking good. All the credit card companies look crappy. They look terrible, and that's not good for the consumer, or that's not a good sign for the consumer. Walmart, same thing, broken down as of Friday. Dow Jones component, major retailer. So again, not good. As I like to put stuff that's very articulate, so I put not good. Okay. FedEx Corp, transportation is economically sensitive. FedEx Corp, look at that, broke around the top. What else? And this is just a bad sign. That's all I can tell you. It's bad enough that they deliver my stuff to the wrong address all the time, but this is not a good sign for the economy right here. Same with UPS, hasn't quite broken down. Not a good sign for the economy either right here. The airline index still hasn't broken down yet. The question is, are they ready for a takeoff or are they about to lose altitude? Well, I'm going to say this right now, that with additional restrictions on flights, international flights, lockdowns and things like that, I don't see how this can actually go a lot higher. These are companies that are in trouble, and as a matter of fact, some of them might be candidates later for the Reddit rebels. Who knows? Alcoa, a metals company, aluminum and some other stuff, all basic. But look at that. This thing broke a parabolic uptrend, 500-600%. If there's ever a case of saying that inflation is not around the corner, the economy is not turning around yet, Alcoa is telling us that. And this is a place where if you haven't taken your money off the table, I would do so right now. This thing really has an awful lot to go down. Same with Freeport Copper. Copper is probably the most correlated to the economy, both copper prices, copper production, and Freeport also has broken down after an enormous move. So, again, the market has changed its mind, which it's very likely to do, and you always have to be very flexible to incorporate new information. You can't have a worldview. My worldview was bullish on gold, okay, but I had to basically lose that worldview because everything that I saw was telling me that my story was not right. So you have to be prepared to take the ego hit of being wrong, closing out a position with a small loss if you have to, and just moving on and getting the clarity of not being in the market for a while. That's always a good thing too. So iShares Silver Trust. Okay, now Reddit rebels are back. Now, for some reason, they have also targeted silver and silver miners. To my detriment, may I say. But I still love you, Reddit rebels, even though you cost me probably $50,000 in the last month on false signals. So the iShares Silver Trust, notice where the elliptical thing is here. I think the Reddit rebels had something to do with this. Barrick Gold, this is not something that the Reddit rebels would be involved in, but look at that big rounded pattern, the largest gold holder, the largest gold miner in the world, and it's not in a positive pattern. This does not augur well for precious metals in the near term. Core mining, okay, kind of a complicated chart here, but I used to own this, I pumped this, I really loved it, and there's at least two places where I'm pretty sure the Reddit rebels got involved and caused me to do the wrong thing. In other words, I would have bought on that first breakout that you see, that elliptical, and I also was thinking about entering precious metals again on Friday. But it was the Reddit rebels. It was not, these were not normal market movements. So, they probably cost me a bunch of money, and I've been whipped around, and I know I've talked about it, false breakouts, head fakes. Once these guys, get enough oomph, to actually make something go, they'll make it go. El Dorado Gold, again, broke through its trend line. Got to give up my worldview. I love this company, but, the chart just says, and that's pretty much what I think about it near term. It's just kind of El Dorado Gold is, you got to wait here for a little while. One thing about us precious metals, permabulls, is that we have the patience of a saint. We're not saints, but we have the patience of one. I don't know what that means, but nevertheless. Kinross is another one that I've liked, and another reason I've had to abandon it. It just has not looked good. It really did. It doesn't now. So again, this is a go to cash. Wheaton Precious Metals, a large cap company, again, looks like it's in a really bearish pattern. It could break down. This is why I think something like Coeur d'Alene has been affected by Reddit rebels, because the larger companies have not. The juniors have, but they're not the larger ones. And that's where I think that I suspect they've been involved. Afria is, we're going on to the marijuana cannabis sector. We're going to end up on a high note here, I hope. I don't know where Elon is, but I told him to bring some sativa with him, but who knows. Afria is a perfect example of a short-term trade. It merged with Tilray, and this is a take your money off the table type of situation. You may lose some upside here, but I'm out of pot stocks as of Friday. I would recommend, I think there's still a lot of upside in them left, but not in the near term. They're going to have to kind of back and fill, and especially with the market kind of expected to not perform well, with things breaking down, you don't want to have longs fighting a short market. So that's basically another reason to get out of something like this. Aurora Cannabis too, still looking pretty good. I mean, these things you can buy low and sell high, because this thing was all the way down to $4 a share. I mean, it had been much, much higher in the 20s or something a while ago. So you are buying low and selling high, and that makes all the difference. Canopy Growth made a new high, a very new high, and very high on Friday. This was still one that the reason, personally, I had a little bit of it, a reason to get out of it. Look how much it has a parabolic trend line. Look how much higher it was in the parabolic trend line. A parabolic trend line should not allow you to get too much higher than it, or you are really, really exhausted. So this thing's about 10 points above its parabolic line. That's good enough for me. Again, take a profit. Thank you, God. Be grateful. And don't worry about not catching the best tick. You know, the best tick is one that gives you a profit. That's all I got to say. GW Pharmaceuticals is a medicinal marijuana company. They actually have some drugs using cannabinabinabidoo oil, like Fred Flintstone would say, yeah, cannabinabidoo. So they've got a bunch of that being under FDA scrutiny, and you'll see that it broke out above its weekly pattern, and this thing could, again, good long-term hold in all likelihood, but right now, with the market probably going down, I'd stay clear of putting on any positions yet or thinking about it. All right, Tilray, my favorite. I even had to get out of Tilray just because of the it just went up too fast. But again, this is one that I put in here because it's the long term is amazing on Tilray. You know, with Afria, it becomes the largest company, the largest cannabis company, and it has an incredible future in three respects. One is you bought low. Okay, it's been to, I'm going to go to this graph here. This is weekly intervals. It's been to 300. Now, this is funny. The 300 that you see on the left part of the graph is when it was in a short squeeze and it drove up to $300 a share. So, you know, that's again one of the reasons I want to tell my Reddit rebel friends that I salute is be careful. You're going to lose all your money. It's not worth it. And you've made your statement, and there's going to be other places, there'll be other wars for you to fight. So what I want to say is thank you all for watching, and be informed, be amused, but never be misled by Hoot Loot. Markonomics 101. Please like and subscribe. We love you people. If you have any questions, please send them in, or any comments, please send them in. And we will see you on our next show with lots of updated stuff. See you later.